Hello and welcome back to How About That Crypto. You are watching your daily crypto news and updates with your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. I am here Monday and through Friday, and I explain crypto and Web3 while keeping you up to date on all the latest. Today's news stories are: Congress accuses the SEC of breaking the law regarding their handling of the crypto industry. The Fed has raised the interest rates. What's this got to do with crypto? Coinbase is being sued in a class action lawsuit for selling unregistered securities. And in the midst of war, Ukraine legalizes crypto. What does this all mean? I'll explain it all. But first, if you like or don't like the content, please leave me a comment below. If you're listening on podcast, please give me 5 stars and follow me. If you're watching on YouTube, please smash that subscribe button, ring the bell. It helps support the channel and it doesn't cost you anything. All right, just to be clear and litigious, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. My prayers continue to go out to the Ukrainian people and all those affected by the war. Hopefully this will be over sooner than later. Okay, we have quite a bit of news this morning. I'd like to start with my favorite news piece of the day. Congress wrote a letter to the SEC accusing them of breaking the law and stifling innovation. This was bipartisan group, which I love because it's not polarizing, at least not polarizing between left and right. We need all the bipartisan stuff we can get these days. And I got something to show you. All right. You can see if you're listening on podcast, you can click on the link below. They are in order. And this is an article. It's by author Ruholamin Hakshanas, and he reports on tokenist.com. On tokenist.com. And the title is Congress letter accuses SEC of U.S. law violation and overburdening the crypto industry. The bipartisan letter expresses concern that Gary Gensler's scrutiny of crypto could be stifling innovations. And I'm going to read an excerpt here. Minnesota Representative Tom Emmer, along with 7 of his colleagues, has sent a letter to the SEC SEC Chair Gary Gensler, questioning the regulatory body's targeted approach towards crypto firms. The letter, citing the Paperwork Reduction Act of 1980, declares that federal agencies should not overwhelm private businesses and citizens with unnecessary or duplicative requests for information. The bipartisan letter claims that the United States Securities and Exchange Commission might be drowning crypto companies in paperwork in contravention of the regulatory body's stated aims. It also voices concerns that an overburdensome investigation could be stifling in the innovation in the U.S. Okay, and I have a couple of excerpts here. So Tom Emmer, and he's on the Blockchain Caucus, and it's a bipartisan group of people trying to promote the blockchain technology and crypto in the industry. And he tweeted out to his over 51,000 followers: "My office has received numerous tips from crypto and blockchain firms that SEC Chair Gensler's information reporting requests to the crypto community are overburdensome, don't feel particularly voluntary, and are stifling innovation." So what do you think about this? To me, first of all, I just love the fact that Congress is telling the SEC they might be breaking the law instead of the SEC telling everybody else that no, actually you are breaking the law. So I mean, I just love this in general. I like when power is checked, and I do think that Gary Gensler is out there, kind of trying to he's all hard charging, and there has been no real clarity in the industry. In his defense, maybe it will take an act of Congress, but what are your thoughts? I want to hear from you. Leave a comment below, and I am moving on. The Fed has raised the interest rates. Author Tor Constantino reports for Motley Fool, Bitcoin and crypto market edge up 4% following Fed's 0.25% interest rate hike. I did not mention this yesterday when it happened because it is already considered to be priced in. I did not expect this to impact the crypto market. Seems I was right. I have not seen much movement in crypto other than this mentioned 4% increase. The challenge I see is that investors seem to be weary of risky assets, and crypto is still seen as a risky asset. However, I have seen reason to believe that there is a decoupling of crypto from risky assets, but there's not enough data to support my theory. I will keep an eye on this, and I will keep you apprised. Moving on. Author Jeff John Roberts reports for Decrypt. Coinbase hit with $5 million lawsuit over unlicensed sale of Dogecoin, 78 other crypto assets. A new class action lawsuit takes aim at Coinbase's decision to list dozens of tokens that may be securities. This most likely will not make much waves. There is currently a lawsuit between Ripple Labs and the SEC, which I have been reporting on. And there's like a ton of information if you look back the last few weeks. And but I mean, actually, last week was mostly Ukraine, but a few weeks before that. But there's tons. I've been reporting on this lawsuit between Ripple Labs and SEC, so you can check out those episodes if you go back and check and want to. So basically, this lawsuit is determining whether XRP, a token, a cryptocurrency, is a security or a commodity. And that is the big question. And that's also the question in front of Coinbase's class action lawsuit, is that Coinbase is selling unregistered securities. But there's really been no real clarity. So this lawsuit, Ripple Labs and SEC, is expected to bring that clarity unless they settle, because if they settle, then there might not be any real precedent. And but I do think it's looking good for Ripple, so we'll keep posted on that. Now, Coinbase is being sued in a class action lawsuit for selling unregistered securities. The problem with this is that there is no clarity on securities laws when it comes to crypto. I have a little excerpt I'm going to read here. It is okay. These type of lawsuits, which almost never go to trial, amount to a gamble by the law firms, which typically seek a payout to go away. In those cases, the resulting settlement usually involves a hefty payment for lawyers and little or nothing for the customers who are the nominal victims in the suit. Interesting. Whatever its merits, whatever the lawsuit's merits, the new lawsuit does serve to highlight the legal exposure Coinbase faces as a result of its decision to aggressively list dozens of new tokens, even as the legal status of those tokens was unclear. So if you use Coinbase, you may have noticed that there has been a little disclaimer on certain crypto that says this is an experimental asset, and they give you a little warning. You have to read it and agree that you understand that it could go to zero and there's a lot of risks involved. So they did that, and then they just decided they were going to start listing them, because since the SEC isn't providing any real clarity, there's no real laws on this, and they just decided they're going to continue to list them, but just puts extra disclosures, because disclosures is the big thing that Gary Gensler keeps bringing up and when he's doing interviews and stuff. So give people the disclosures, let them decide for themselves what to invest in, and let's get on with this show. That's my opinion. Anyway, let me finish this here. So Coinbase faces legal exposure for this. And while SEC officials have suggested that Bitcoin and Ethereum are not securities and don't need to be registered with the agency, that's not the case with thousands of other crypto assets that trade every day, some of which clearly are securities and some of which are in a gray area. Now, it's not clear if this is the author's opinion or if this is definitely something that the SEC has been saying. If it is the author's opinion, I would say that I don't know that they are clearly securities. I do think that maybe you could argue some are, but because there's no clarity, it's kind of hard to argue that some are. And I think the big question has been around centralization. Well, anyway, what are your thoughts? Do you think this case has legs, or do you think this is some lawyers just trying to make some money? I think Coinbase will. Do you think Coinbase will have to pay them to go away? Do you think the lawyers are going to get their money? Is this just a frivolous lawsuit to make a quick buck? Tell me your thoughts. Leave a comment below. I want to hear from you. And now we're on our last story of the day. This is amazing. I kind of saved it for the end. Author Arjun Karpal reports for CNBC. Ukraine legalizes crypto sector as digital currency donations continue to pour in. The new law creates a legal framework for virtual or digital assets, exchanges, and other crypto companies. And the ministry looks like the Ministry of Digital Transformation. So there's a tweet here from Ukrainian officials. It says, Ukraine has legalized the crypto sector. Zelensky, the president, signed it into law. From now on, foreign and Ukrainian cryptocurrency exchanges will operate legally and banks will open accounts for crypto companies. It is an important step toward the development of the virtual asset market in Ukraine. I think that's super awesome. And one more little excerpt here. The virtual assets law determines the legal status, classification, and ownership of virtual assets. It also introduces financial monitoring measures for virtual assets. Ukraine's National Securities and Stock Market Commission will regulate the market. The body will be in charge of areas including issuing licenses to crypto businesses and implementing state policy in the industry. This is super bullish in my opinion, and I'm very excited to see this. Countries around the world have taken various approaches to regulating crypto, and Ukraine looks to tailor a law specifically for the crypto and digital asset industry. Now, I think this is super awesome. What do you think? Do you think that this is super cool? Like, I think it's a little kind of crazy that they're doing this in the midst of war, but maybe it's not that crazy because the reality is they've received, I've reported, I think it was yesterday or the day before yesterday when I talked about how Ukraine is going to is going to create an NFT collection, and each piece of art is going to tell a story from a credible news source, and it's going to be sold to help tell their story of the conflict, but also to help them raise money. And they've raised over $80 million. So, it depends on which article you read. One of these articles said 63 million. The article I reported on yesterday said 80. Point is, they've raised a ton of money, not as much money as the U.S. is provided in assistance, but still, it's a lot of money. And maybe they're doing that because a lot of Ukrainian citizens have dropped money directly into their wallets. One of the exchanges gave money directly to people, $1,000 worth of Bitcoin, and they could exchange it for fiat currency for no fees if they wanted to. And that went directly to the people's pockets, not to the government's wallet. Now, what do you think about this? Do you think this is awesome? Do you think this is crazy? Do you not like this? Do you love this? Please leave a comment below. I want to hear from you. Give me some feedback on the show, and please like and subscribe. If you're listening on podcast, please give me 5 stars and follow. If you're watching on YouTube, smash that subscribe button, ring that bell. It helps support the channel. It doesn't cost you anything. Have a good day. Hodl on.